Bloomberg Audio Studios. Podcasts, radio, news.
Very pleased to be joined this morning by Mike Wilson, Chief U.S. Equity Strategist at Morgan Stanley, as we continue to watch the market reaction to all the trade headlines we've seen over the last days and weeks. Mike, good morning. Thank you so much for being with us. We're seeing futures pull back this morning, a pop in the VIX after the 35% announcement on Canada, 15 to 20. The president saying for much of the rest of the world. Is the market starting to wake up to what could be coming when it comes to trade? Good morning.
Good morning, Nathan. Well, I would say here we go again. We kind of know the pattern now. This is President Trump's style. He goes hard, and then he doesn't back off completely, but it's a back and forth. And that's his negotiating style. It's the old BATNA where you put your stake in the ground and aggressively, and then you try to negotiate something. And so the market has figured this out, though, and I think President Trump has figured it out, too. But what I've found interesting is that he'll come out and do something, that's perceived quite negatively, like overnight. The market will go down 1%. And then something will change, and then the market will go up 2%. So it's like one step back, two steps forward. Now, that's not going to work forever. Eventually, we have to get to some deals. So, we're getting closer. I think, he's just trying to exert as much pressure as he can to try and get some deals done before these deadlines. These deadlines get pushed back, and that's a classic negotiating style. So we'll see if it's successful. But as you mentioned, the market seems to be okay with it for now. And that, I think there's an article you mentioned, I think it does embolden him to continue to go down this path.
Given where the futures action is going this morning, do you see the market trying to steer what the president could do when it comes to the overall trade regime?
Yeah, I think it's a good thing to think about. Is the market going to exert its force to make all the folks involved in this policy making to come to some sort of conclusion? Hasn't happened yet. There will become a point of exhaustion, is the way I like to think about it. To me, that's probably sometime during the third quarter. I think the other thing that could happen in the third quarter that may exert some pressure is that so far the tariffs haven't really had an impact on margins and revenue or demand. And some of that has to do with the timing of everything, right? We have a lot of companies still selling older inventory that's cheaper, so it hasn't had to flow through to pricing or margins. But that, we think, begins to change in the third quarter. And that could be the catalyst because stocks will react to hits to margins, or perhaps we get a spike in inflation, which then causes the Fed to sound more hawkish, and the market will care about that for sure.
Do you expect companies to start to telegraph that in their earnings forecast? We've started to see some companies talk about what the tariff impact could be as they've been reporting in the early going. How do you see that shaking out?
Yeah, so I think it's primarily an issue. It should be an issue for some of the consumer companies where they don't have a lot of pricing power. They've got probably some excess inventory, on purpose, or maybe they did that because they wanted to get ahead of the tariffs. And so I do think that's the part of the market where we could start to hear. Second quarter should be fine. It's going to be about the third quarter guidance. And those companies I mentioned tend to report towards the end of earnings season. So end of July, early August is when I would expect to hear more sort of negative comments there. I think in the early parts of earnings, we're not going to hear much negativity around that. Financials don't have a lot of, tariff implications. Some of the bigger companies can mitigate this. The weaker dollar is quite helpful as an offset to the multinationals. And now we have lower oil prices, which I think is also an offset for some of the tariffs from a consumer standpoint.
Do you expect dollar weakness to continue if we do see higher tariff rates shake out across the world?
Well, we have a weaker dollar view over the next 12 months, mainly because of the rate differential we expect, meaning the Fed's going to be cutting probably more aggressively. They have more to cut than other central banks around the world. That's the primary driver. And then, of course, as inflation does eventually come down, we think this is a temporary spike in inflation from tariffs. That'll be another driver. So in the very near term, I think one of the bigger risks of the market people aren't thinking about is that we could see a dollar rally, just a counter trend move. Like the trend is down, but nothing goes straight down all the time. And the dollar does look to me like it's trying to stage a rally here. That actually could be somewhat of a negative for equities in the third quarter, potentially. nothing dramatic, but I mean, I think that's probably a bigger risk than people are thinking about.
Tell me a little bit more about why you think there could be a rally in the dollar, because there's been, some thought that with, this aggressive trade stance that the president's been taking, that it could spark a negative reaction from currency traders in terms of what other countries do.
Well, I think we've seen that, right? I mean, markets trade in advance, and I think the currency market has pre-traded a lot of what you just said. I mean, quite frankly, given the fact the Fed's been on hold all year and many of its peers around the world have been cutting rates, the dollar, should have been stronger, and it hasn't been. So I think a lot of the tariff concerns are in the currency market, and so that's digested. What's not in the market still is this idea that the Fed's on hold, and it's our calls that the Fed's going to remain on hold the rest of this year. I think at least in the third quarter. And so to me, it's just a counter trend rally. And then of course I'm a technician, like a lot of investors, and it looks to me like it's trying to stage a technical rally. That's all we're looking for.
Okay, so in our last 30 seconds, do you expect continued U.S. leadership when it comes to stocks compared to the rest of the world?
I do. I think we had a pretty good clean out in April. This has been our call since April. The rate of change on everything we look at from a stock standpoint reversed. By the way, it doesn't mean that foreign stocks, can't perform too. But I do not believe in this idea that we're going to have this multi-year run in foreign equities relative to the U.S. And I think that's played out since we made that call in early April.
And thanks so much, Mike. Always great to have you with us on Daybreak. That's Mike Wilson. He is Chief U.S. Equity Strategist at Morgan Stanley.